Hello and welcome to OneNorthStar's continued coverage of the market. As we record this in the second week of August, we would like to talk about the volatility that has been seen in the recent past many weeks in the stock market. There have been many reasons and causes that have been attributed to this volatility to the downside. The first and foremost, of course, has been attributed to the lack of action, perhaps, on the side of the Federal Reserve. The Fed, in short form of the Federal Reserve, they feel the market feels, or some market participants feel that they should have already started cutting rates because there's already some fear of a recession, and so the Fed should be on the leading edge of that and look to cut short-term rates. That, from a perspective, of course, is an opinion. From our perspective, our opinion is the Fed is doing just fine. Whether they cut rates, immediately, or as they've been talking about in the late part of September, and that's where their opinions are, is less of relevance to the market. The correction is not due to perhaps just because of the Fed being behind the curve, as some commentators have put it. I think the Fed, in that perspective, is less important than we make it out to be, because the Fed only controls a short end of the curve. The market, or the open market, continues to control the long end of the curve, which is where most of the bond placements are done of any meaningful nature. So typically, companies will raise funds in the bond market by at least having corporate paper out to be of a duration of 3 years, 5 years, and if not more, 10 to 20 years, depending on the credit rating. And so that continues to be, being telling us that there is volume getting priced there on the long end of the curve, and there is no, as it happened during the financial crisis or prior bear markets, there is undue stress. There is some stress in certain weaker spots of the market, but overall, the bond market continues to be in a reliant position, is our view. So the Fed, in that sense, is less to be watched. The second factor, which have been talked about, is the yen, or the carry trade that's been done in the yen. The yen being the Japanese currency, and because Japanese rates are very low, we're almost negative for longer windows of time. And so the US market, for example, had positive rates, so people could borrow in the yen market at almost negative rates or very low rates, and then use that money to as an example, invest in higher allocations funds in the US, as one example, even in Europe for that matter, where interest rates are higher, so they could earn that spread. And so that was the one example of the carry trade. And so they feel that that's got unwinded because as the BOJ, or the Bank of Japan, has bumped up the rates a little bit more, they feel that carry trade could get unwinded. Perhaps that might be the case. There is certainly some strength to that, where the carry trade or the unwinding of the carry trade has led to some volatility in our view. Yet at the same time, the interest rates that have moved up from a BOJ perspective are reasonably nominal. They're not like exogenous currents, exogenous rates currently. And so, yes, the carry trade is perhaps just that little tad less lucrative, but continues to be, from anybody who's had a carry trade on for the longer time, it still continues to be of positive momentum. I think these are short-term quibbles and swings and sort of ebbs and flow, especially on a month-to-month basis, which any participant in the stock market should be ready for. Yes, there are somewhat disconcerting. Yes, there are many causes that have been attributed to it, but at the very high level, this is typical movement of the stock markets, many days to the upside, many days to the downside, but overall, systemically, it moves, in our perspective, from the bottom left to the top right. With squiggles, yes, it's never a straight line, but relatively, from our perspective, in the right direction. Hopefully this has been of value to you. We look forward to your feedback, and please continue watching our coverage of the markets, and we look forward to any questions and comments that you have on your side. Thank you for your time.